take a minute to talk about edge. And when we talk about trading edge, most people confine that concept to just whether or not their trade has positive expectancy. And that's really an incomplete thought about edge, right? So your strategy, your trade obviously has to have positive expectancy, but you have to have the application component and you have to have the proper middle game. And those three things together creates our edge, and it allows us to have the adaptability as markets change. And you're going to see that as a theme going forward. Is that's really what creates your edge, right? So, I mean, John, we all know, everybody in our community, the things that worked before the COVID crash are not necessarily working now. They're not, and nor should they. They're not made for, downtrending markets necessarily with high ATR and high implied volatility, flat skew. And the ability to adapt and recognize what makes your strategy, what gives it, recognize what makes your strategy work, its strengths and weaknesses, the ability to apply that strategy in the proper way using risk management. The one thing we can really ever control in our trading is position size, right? That is the number one thing that you can control. Everything else, there's variables that you cannot control. You can only put yourself in a position to be lucky, which is to say, as long as I'm making good risk reward decisions and putting the probabilities in my favor over time, I'm going to have positive expectancy in my business. So I just want everybody to recognize, we've talked about the middle game. I mean, that goes without saying at this point, right? But, there's also part of the middle game is managing expectations and realizing there are going to be good periods, there are going to be bad periods, rough patches, and how are you going to deal with that? So all of these things together, throwing those in the pot is the recipe to creating an edge in not only your trades, but your trading business.